It's the last edition for the week. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams, TGIF. Let's take a look at what's in the news. U.S. crude oil futures were on track for their biggest weekly decline since late October on Friday, with prices coming under pressure as top consumers impose travel restrictions amid the spread of the Delta variant of the coronavirus. However, rising tensions in the Middle East provided a floor under the market. U.S. West Texas Intermediate crude futures have dropped 6.6% this week, the biggest weekly loss since the end of October. The market was unmoved at $69.09 a barrel.
Brent crude oil futures have given up 6.6%, the most since mid-March, and prices were down 2 cents at $71.27 a barrel. Worries over rising tensions between Israel and Iran limited the declines in prices.
And the president of the Ecowas Commission, Mr. Jean-Claude Brault, has announced plans by the Commission to commence the implementation of the region's socio-economic agenda, tagged Ecowas Vision 2050 by December 31st, 2021.
Speaking at a meeting organized for members of the Permanent Representatives Committee of the body in Abuja, the Ecowas chief explains that the new initiative will serve as a platform for the region's socio-economic integration and provide inclusion for all while removing all forms of impediments to trade and technology transfer amongst its member states.
Thank you very much, Madam.
Members of the Permanent Representatives Committee and ECOWAS resident representatives converge here to discuss issues of economic diversification, transportation, infrastructure, and economic ties amongst member countries.
It is a pleasure to be here.
They're seeking ways to improve the living conditions of people in West Africa. That's why they're considering a draft of the region's Vision 2050 agenda to drive the process.
The meeting with you today get the ball rolling for the validation process, leading to the presentation of Vision 2050 to the authority of ECOWAS Head of State and Government for endorsement in December 2021. Your Excellencies, distinguished ladies and gentlemen, Vision 2050 seeks to build on the accomplishment of Vision 2020, which has set a strong foundation for the movement from an ECOWAS of state to an ECOWAS of people.
Before now, the body has been considering a series of strategies to improve the people's lives, including the Vision 2020, which experts say has achieved some level of success despite the current state of insecurity in the sub-region. Members of the ECOWAS region and development partners list areas of priority which the new policy must focus on.
The discussions at this two-day meeting must be all-encompassing, as well as prefer potential solutions to the challenges confronting the region. All ideas expressed must be taken on board, as this will ensure that the final vision is strategic and incorporates a realistic time frame for all the programs and projects that the community intends to implement.
The GSZ is confident that the future Vision 2050 could be a watershed for the region if the inclusion and commitment of the development phases remain high for all the stakeholders for the next steps.
For 2 days, these representatives drawn from the ECOWAS region will come up with strategies to change the narrative in the socio-economic development of its people. That, if well implemented, will be a game changer for the West African sub-region.
And the Federal Executive Council on Wednesday gave approval to NNPC to acquire a 20% stake in Dangote refinery in Lagos. The state-owned oil agency intends to be a minority shareholder in the company, which has the capacity to refine 650,000 barrels of crude oil daily. So what does this mean, not just for the parties, but for Nigeria's economy as a whole? We're being joined by Bismarck Rawane, CEO of Financial Derivatives Company, who is going to dissect all of this. Good morning, Mr. Rawane. Thank you for joining us on the program.
Good morning for having me. Yeah.
Right, NNPC surprisingly, of course, announced that it's going to be paying a dividend. That should be probably by September this year. And then FEC subsequently announced the approval for NNPC to acquire a 20% stake in Dangote refinery. So are these two decisions in any way linked, or is it just a coincidence?
They're not linked directly. but they are linked indirectly. So let's start off by actually seeing what does NNPC do and what's the plan of NNPC going forward. And then let us see whether there's a mutually reinforcing or mutually beneficial relationship between Nigeria, the government, NNPC, an oil regulator, cum producer, right, national oil company, and then Dangote refinery and other refineries for that matter. So let's start off by saying that NNPC is under pressure. NNPC has having what we call under recovery subsidies, and therefore have been unable to remit money to the Federation account recently. Then, surprisingly, they decided to declare a dividend. Dividend also has to be paid in cash to the federal government. So you know they have the LNG model where MDAs, corporations, and investments remit their surplus or remit their dividends to the Federation account. This has affected the amount of FAC that states and the federal government have been sharing. Now, what does this mean particularly? It means that Nigeria, NNPC, are doing this. I mean, this conspiracy theory is that NNPC would like to list on the Nigerian exchange, all right? And to list, you must have declared dividend in the prior 3 years. That's the fundamental thing. Okay. Is that going to happen? That's a different thing. But the beauty, if that happened, because of disclosure requirements, transparency requirements, and all of that, NNPC is going to be much more transparent and much more accountable. There's no question about that. Now, subsequently, the next day or the day after, the Federal Executive Council approves the acquisition of a 20% stake in the Dangote refinery and petrochemical and fertilizer complex. So we can take it as independent events, but at the same time, any discerning investor will take a look and say, yeah, it is inextricably linked, but not directly linked.
Okay, but the typical process is for a state-owned enterprise to be, privatized, and not for governments to acquire stakes in private companies. What is the meaning of this reverse process we have here?
Yes, it is true that normally what happens is that you privatize state-owned enterprises, you liberalize the industry, and you deregulate the pricing mechanism. That is the normal, typical process. But at times, you go against it for peculiar reasons. For example, Aramco is the largest oil producing company in the world. They had the largest IPO. This morning, they declared a massive dividend. And they said, in fact, they're going to give more. I think 500 and something billion, $58 billion or something like that. Now, NNPC is acquiring a stake in Dangote refinery and other modular refineries. But why would NNPC be doing that at a time when there's a reversal? So what is in it? What is in this transaction for NNPC and what is in it for the Nigerian government? Let's break it down. NNPC is committed to providing, to making sure that Nigerians get refined products. That is petrol, diesel, kerosene, and all of the others. And we'll come back to that in a minute. NNPC is also charged with responsibility to ensure that Nigeria's share of the joint venture crude gets sold. NNPC is also charged with being on a joint venture and having production sharing contracts through NAPIMS with IOCs. So if NNPC has a stake in Dangote refinery, what does it mean? It means that at least it is guaranteed the refined products. And what for refined products? There's diesel, there's PMS, there's AGO, there's dual-purpose kerosene, which is aviation fuel. And I'll take aviation fuel in particular. Right? The aviation industry contributes 535 billion naira to the economy. Right? Since COVID, that sector actually suffered globally. Yeah. Before, Nigeria has about 1.7 million international passengers, about 6 million passengers a year in 2019. Of these passengers, for every 100 Nigerian passengers, the 5 most important destinations to Nigerians were as follows: 17 out of 100 Nigerians traveling abroad went to the UK. Okay? And 13 of those passengers going abroad went to the United States. No, actually 15. 13 went to Dubai. 4 out of 100 went to, 8 out of 100 went to Ghana. And 4 out of 100 went to Saudi Arabia. Those are the most important destinations. And within the United States, number 1 destination was Houston, Number 2 is Atlanta. Number 3 is Washington, D.C. I'm just trying to give some breakdown as to aviation fuel and aviation, the recovery of aviation. Yeah. Let us talk about cooking kerosene, talk about gas, talk about petrochemicals, talk about diesel. So all of these things. So it's not just NNPC and Dangote refining products, but the industries that use the refined products who alternatively had to go through a tough process to get that. What is in it for Dangote? Why should Dangote be selling? Mm-hmm. Well, Dangote wants, the refinery is of no use if it doesn't have crude. If it has NNPC having an equity stake, it means that at least it's assured of crude coming to the refinery. Dangote wants to be sure that he has a market to sell into, especially in Nigeria. Don't forget, the refinery is a hub process which takes care of the whole of West Africa, right? So Dangote wants to ensure, or the Dangote refinery, that he gets a market here in Nigeria. And that's good because it's modern, it's cutting-edge technology. Its costs are probably about 30% lower than the rest of the world. So
we can expect competition?
Yeah. No, okay. there will be competition. There will be competition. Any industry that doesn't have competition is, right? So there must be competition here, right? So,
and particularly with the Port Harcourt refinery and the Warri refinery and Kaduna refinery, hopefully
ones coming on board.
It's interesting how much we are spending on rehabilitation and resurrection of compared to the acquisition.
Anyway, so, before we come to that, because a lot of people would have argued that, okay, those refineries, maybe government should have actually privatized them instead of rehabilitating them. But let's look at the valuation. $19 billion seems like a huge amount for, a refinery. The NNPC is purchasing 20% stake now. What are the risks there, or are there none, both for NNPC and for Dangote?
Well, you see, the reason profit is defined as the reward for risk taken, right? So Dangote committed himself to billions of dollars of investment and expects to get a reward. NNPC is also making a strategic decision and expects to get a reward. Some people say, why didn't NNPC before now buy into international refineries in Rotterdam and all of that? But okay, like they say, it's better late than never, but better to buy your own than to buy others. Mm-hmm. Now, the risk of overvaluation, you see, what the government has committed is that NNPC go and purchase 20% stake in Dangote. The process is like you're sending somebody to the market, go and buy me, so. You're not going to say the price at which. The pricing of that project will be discussed and negotiated, hopefully in a transparent manner, so that everybody will see it, because this is a massive $19 billion investment. $19 billion is significant. It's not only significant, it is substantial. And to put it in context, the entire, the GDP of Rwanda is $10 billion. This project is 100% higher than the entire Rwandan economy. So that just to give you some perspective. Therefore, they're going to the table. Obviously, there'll be international audit firms, and it has to be an open and transparent process to see that Nigerians and Nigerian taxpayers are not being taken for a ride. I think that's very important, and that in this day of the social media, internet, and all that, it is very unlikely and almost impossible to do things that nobody will find out. There are prices. Refineries are being constructed today, so everybody knows what is a 650,000 million barrels per day refinery, single train. What does it mean, right? And therefore, there is it is hoped, and I believe strongly, that the process, this is the authorization to go and invest, but the process of investment and the price and all that will be open book. Everybody will see it. And if anything, in any case, nothing untoward is likely to happen.
Okay, but you did mention, that hope Nigerians won't be taken, for a ride there. So, what protection is there for the, ordinary Nigerian that's going to be paying for this product?
Well, let's put it this way. Let's start by saying what is the benefit to the ordinary Nigerian? Because the price is what you pay for the benefits received, exactly. Right? So the Nigerian is likely and probably guaranteed to have constant flow of fuel in petrol, kerosene, diesel, and all the other products, right, from a fractional distillation column. Now, is the Nigerian, pardon my French, is the Nigerian citizen going to be screwed by this? I don't think so, because we just talked about the pricing, right? And it's open. If the Nigerian citizen, who in all fairness has been ravaged all of these years, and now they need to be relieved from this pressure, I don't think anybody will accept it. The entire world knows refineries are not things that you're building a house. Everybody knows what the price of a refinery is, and therefore you pay. But if the refinery as a structure, it means nothing if it's not producing. So the real question is, when and how will the Nigerian citizen benefit from this and make sure that it has effective petrol in the station, rather than spending 3-4 hours. Remember the days we have 3-4 hours. As a matter of fact, there was a release today saying that DPR is going to be monitoring 33,000 petrol stations.
Those that are smuggling.
No, come on, please. There will be no more smuggling.
All right, now what was it? Dangote refinery, maybe at some point, will be publicly, quoted. Do you foresee the government selling off its shareholdings?
Well, let me say this, that the government will be a shareholder, right? Typically, the government is not in the business of, right? So I believe that somewhere down the road, the government will divest, because the government will use its resources to build infrastructure and roads, airports, and all of that. So once that is up and going, and the price of the investment is lucrative, and there's a modest return, the government may decide to hold, or the government may not. But let us ask ourselves, has the government sold its interest in LNG? No. The government gets something like almost $12 billion a year from gas. So if it's profitable, which I think it is, it will be. Don't forget, let us look at Dangote Cement. Dangote Cement grew their revenues by 34% in the last year, when manufacturing itself grew by only 10% and the GDP grew by only 0.5%. So it had performed the GDP as a whole, it had performed the manufacturing sector, and it also outperformed competitors and paid significant amount of taxes. But that's just, MTN did the same. MTN is even thinking of building roads. The revenues grew by over 54%. So government investment in private sector, well-managed companies, and using the profit to provide healthcare, education, and things for the people may be a good strategy.
So you're saying that the total benefit outweighs the opportunity costs, or direct and opportunity costs?
So it appears. And also the track record of the investments themselves also give us confidence that this may not be a bad deal. But in anything, there's always a risk of the unknowns.
Okay, we'll see how that goes. Thank you very much, Mr. Rani. We do appreciate
Thank you for having me.
Your time. All right. We'll take a break, and when we come back, we'll look at the planned Eurobond issuance by the federal government. Do stay with us.
And now to our next conversation. The Federal Executive Council also approved the transaction advisors to facilitate the issuance of a $6.2 billion Eurobond in the international capital market. The institutions include International Bookrunner, JP Morgan, and Citigroup Global Markets Limited, joint lead managers, a Standard Chartered Bank and Goldman Sachs, a Nigerian Bookrunner, Chapel Hill Denham Advisory Services Limited, and financial advisor, FSDH Merchant Bank Limited, international legal advisor, White & Case LLP, and Nigerian legal advisor, Abanwa Nigodalo. The transaction advisors were selected from an open competitive bidding process in line with the Public Procurement Act of 2007. Join us now to look at this as the head of portfolio management at Commercial Partners, Victor Alui. Great to have you on the program. Good morning. Good morning.
Good morning. Thank you for having me. Morning. Thank you for having me.
Great to have you. Well, the federal government has just, appointed, transaction parties to the upcoming Eurobond transaction. Do you think this is timely?
Absolutely. Recall that the federal government was actually going to tap the international debt market early last year through a Eurobond offering, but that was obviously put off as a result of the COVID-19 pandemic. So I think it's been a long time coming, as a matter of fact. So I think the timing is great. The market has been expecting this for quite some time. So yeah, it really remains to be seen, the various modalities of the offering and how things will go.
You think the current wave of COVID-19 will impact the pricing?
Well, yeah, there's certainly going to be an impact. I mean, for context, global debt has risen quite significantly through the COVID pandemic. As a matter of fact, global debt now sits at around 356% of GDP. We saw a 35% increase just last year. So clearly, as a result of the economic or the debilitating economic impact of the pandemic, countries and corporates have had to race to tap the debt markets to keep their economies afloat. So obviously, this has, an impact on the pricing. However, the pricing would also be largely determined by, the sort of pricing that we're seeing within the secondary market at the moment. So it's going to obviously be a number of factors: the tenor, the size, the current pricing in the secondary market, the economic outlook, and all of that. So yes, I think that the impact of the pandemic would put some pressure on the sort of pricing that we're likely to see.
All right, but with the surging borrowings in the past few years, are you not concerned, about the sustainability of this?
I mean, I think, debt in itself isn't necessarily a bad thing. If you look at Nigeria, we've got, current debt stock around $87 billion, which is just around slightly higher than 20% of our GDP. I think the concern for us has always been around, revenue. Debt service and revenue, right. So if you look at, between January and June this year, we essentially spent about 98% of revenue generated for debt servicing. So obviously revenue shortfalls are beginning to show up, and that's impacting our ability to continue to service that debt. So I think, revenue just needs to improve and to support our ability to continue to be able to service that debt. So my concern really, from a statistical perspective, would not be around what our debt to GDP is. It would essentially be around the sort of revenues that we're generating to continue to service, the debt that we have. Also, if you look at the Eurobond issuance, Nigeria has Eurobonds outstanding of about 10.6 billion. A country like Ghana has about 14 billion thereabouts. So in terms of sustainability, I don't see any worries. Nigeria redeemed about 500 million worth of Eurobonds early this year. So I think that the capacity is there, for us to take this on.
Now, we can also attribute the significant increase in Naira value of the foreign loans. Why is Nigeria still considering this option, given the implications?
Well, I think the cost is something you obviously want to look at, the cost and also the liquidity. The Eurobond market is very huge. For context, this year alone, we've seen Cameroon come to issue. We've seen Benin Republic come to issue. We've seen corporates like ETI also come to issue. And all of these offers have been heavily oversubscribed. So there's a decent amount of money there that is actually waiting for a sovereign that is on a stronger footing like Nigeria compared to the rest of the SSA pack, that would help Nigeria tap into, good pricing, in the international debt market. So I think it's a viable option, although I know that the entire 6.1 billion will probably not be raised, certainly not be raised in the Eurobond market, probably half of that, and then the rest will probably done through some counterpart funding. But I think that the Eurobond market provides a very deep place where the government can actually, raise this money at decent pricing.
All right, if I'll put you on the spot now, what do you think the stop rate will be, given the current environment?
Well, I think that a number of things over the last couple of days have served to play to the advantage of the Naira, right? We heard about the SDR that's coming in later in the month, and obviously this Eurobond issue as well. So all of that would basically serve to boost reserve position and could create a situation where the Naira experiences some sort of appreciation in the near term. As to where the spot rate should be, really that's at this point in time, the jury is out on that. But I think that the Naira is slated to receive some support in the near term.
Now, looking at the current Eurobond market, why have we seen a slowdown in corporate issuance?
Well, I mean, I wouldn't say that there has necessarily been a slowdown in corporate issuance. In October last year, First Bank had an issue, raised about $350 million. February this year, ETI had another offer as well, raised some money as well. So I wouldn't say that there's been a slowdown in corporate issuance. Most of the big Nigerian banks have Eurobonds out there that are maturing between next year and probably 2024. So we're probably going to see maybe a rollover of those or refinancing of that. Seplat also did that, not long ago. So I wouldn't characterize the corporate issuance space as having slowed down. If anything, with the pandemic, I think there's been, decent activity. Maybe not at the level we expect, but I think there's been decent activity there.
All right, so Eurobond is on the CBN ineligible list. How has investors been, how have they been sourcing dollars? And do you think, CBN should supply dollars for investment purposes?
I mean, like you just said, so that is banned, right? But again, you have a huge wall of money in the international markets, that's looking to pick up yield. So my suspicion is that most of this is going to be, offered to international fund managers. And I think that's where most of it is going to be picked up. Yes, local investors that want to be a part of it will have to source their FX autonomously, really.
And then do you foresee an oversubscription of this Eurobond eventually?
Absolutely. I mean, if I were to go by what we saw for Cameroon, what we saw for Benin Republic, I think there's going to be an oversubscription. Suspicion is that we're probably going to be raising anywhere around $3 billion. I think Nigeria could get up to $5 billion of that. So it depends on what the DMO then decides to take. But I definitely think, based on what we've seen with some of the issues we've seen this year, that there will be an oversubscription. Recall that there's quite some money out there looking to pick up yield. So I think there will be an oversubscription of this.
All right. So what's your outlook of the market for the rest of the year?
Are we talking Eurobond market now? Or?
Yes, the Eurobond market.
Okay, well, I mean, the Euro market has been soft over the last couple of months, really. A number of factors continue to plague it. Obviously, we're continuing to monitor the inflation situation in the U.S., continuing to monitor how that 10-year U.S. Treasury moves and what impacts it, really. So over the last couple of months, the market has been a bit tepid. In spite of the ascendancy in crude oil prices, that has failed to really lift, the market. I think a lot would depend on, how the Fed moves in terms of monetary policy. The Fed has continued to reiterate the fact that the inflation we're seeing is transitory and will certainly, wear away. But the market seems to think something else. So it really remains to be seen how, the market reacts to what the Fed does in terms of monetary policy. When the Fed also comes out with guidance in terms of its the tapering of its asset purchase program. So these are factors and things that we continue to monitor to see how they will impact the SSA Eurobond space. So I think between now and the end of the year, we're likely to see the market pick up at some point, as yields have actually been traced upwards, quite decently over the last, couple of months.
And of course, looking back here now, how do you think our market will respond to all of this? What's your outlook?
Well, I think that, for the local fixed income market, the fact that we're going to be raising anywhere around 1.2, 1.3 trillion from the international market obviously reduces the need for the DMO to raise debt locally, and that obviously would reduce the anticipated supply and have that positive impact on yields, really. So I think that with the Eurobond issuance, with the SDR that's coming through, with the impact of that on the FX situation, with the impact of that on local fixed income supply, we're likely to see yields decline in the fixed income markets in the near term.
All right, thank you so much. I will have to leave it there now. Victor Aluyi is the head portfolio manager at Commercial Partners. Thank you so much for your time on Business Morning. Enjoy your weekend.
Thank you.
All right, now time for an opening call to the market. Here is Anete Edet. Well, Anete, markets reversed into the red.
Yeah, good morning, Ladi. I'm sure you can remember before I went off yesterday, I told you that the market, you just can never predict. Just when you're trying to keep that optimism, it can decide to go, away from your thoughts and then have a mind of its own. So
exactly.
Well, at the close of Thursday's trading, this is what we had yesterday, back in the red. Of course, that comes after 3 days where the market was going up, although it's not as if maybe the market had really been positive. On Monday, telco giant MTN lifted the market. On Tuesday, MTN, Airtel combined to lift the market in spite of a negative sectoral performance. Wednesday, not too much, but the market was up. But this is what we had on Thursday, just yesterday. So now the market lost about 63 billion naira. And of course, in terms of the sectoral performance, it was quite mixed there. Banking sector was down by 0.30%. That was because there was profit taking on GT Bank, GT Co, formerly, that's the new name. And then, of course, we also had some sell pressure on MTN Nigeria, which led to the 63 billion naira that we lost, knocking off, from a total of 198 billion naira that we gained in the last 3 days of this new week. So, of course, the total volume and value were in the red, but the deals were higher in contrast to the previous day's session. So, but to give us more, let's speak with Richard Akimoladu, who is a trader at CSL Securities Limited. So thank you, Richard, for joining us.
Thank you for having me.
Yes, so Richard, how do you call the market? It has defied a flurry of second quarter earnings, and then of course it doesn't seem to have the much needed lifting that that you would expect. So can you give us an update on what happened in Thursday's trading session?
So if you take a very close look at the market, even the gain you talk about for the first three trading days of the month were very marginal. They were at the back of some of the most capitalized stock in the market, the like of MTN, Airtel, and Zenith. And what we witnessed yesterday was a wipe out of all the gain that the market has witnessed from the beginning of the week. What we noticed is that there has been sell-off in across all sectors in the market. Even with some of the stellar half-year results that were released across all sectors into the market, we've seen the market has not yet reacted to this good result that we have seen. I want to believe that investors are trying to digest and make a good meaning of those numbers before coming to the market. We've noticed that some of the institutional investors are not yet back to the market, the like of the PSA and FPIs. What we have seen is that we've seen retail investors just trying to cherry pick in the market. Going into next week, I want to believe that by that time, investors must have digested all these results, and they might come back to the market to take a position in some of these companies that has posted a very good half-year result. Most especially the interim paying companies like the like of Zenith, GT, UBA that we are yet to see the result, that investor might try to actually take position in this stock in cancellation of the interim dividend that they have to pay. Also, if you look at the fixed income market, we've seen that yield has continued to come down in that market, and there's a lot of liquidity in that market. That we're expecting another auction in T-bill next week. That if rates start going down as they are now, that we might see some inflow from that market, and so that's what we are seeing from here.
Okay, so now for the first week of August, the market it's still struggling between profit taking, bargain hunting. Is that what we should attribute?
Yeah, before now we talked about the fact that what the market is expecting is this half-year result, and luckily for the market, most of the results that are coming to the market were very at least good. But investors just need to take look into the base effect of last year due to the lockdown that the economic witness. So I want to believe they're trying to digest the results before taking position in the market. And the market also need active comeback of these institutional investors, the PFA. They are the major player in the market before now. But what we have seen is that they've been on the sideline. They've not been actively participating in the market as they used to do.
Okay, so thank you, Richard, for that update, and then we'll keep an eye on how Friday's market pans out later today.
Thank you for having me.
Okay, it's a pleasure. So that was Richard Akimuladu, who is a equities trader at CSL Securities. So now let's flip over to the fixed income market. It was quite a bullish sentiment there. The highest there was 27th of March 2035. It had 5 deals, 1.40, and in total, number of deals carried out there was 30, valued at 8.27 billion naira, as well as the treasury bills market. Well, the demand was much more on the at the benchmark curve. The average use was flat at the short end, but contracted at the mid and long segment. That's due to demand for the 175 dates and the 208 date bills. Well, similarly, the average yield at the almost segment, it contracted. It fell further by another 5 basis points to 8%. So that's what we had as of yesterday. And then for the central bank's special bills, it maintained its uptick. It was up. We had about 17 deals there valued at 38.71 billion naira. And then, of course, the total number of deals carried out there was 17. Of course, that paper has not been all that active, but in the last 2 days, it has made some comeback. So now let's flip over to the unlisted securities market. It has also managed to maintain an uptrend. That's within the last 2 days. It made 0.05% increase there. Number of deals carried out there was 16, which was higher by one in contrast to 15 that number of deals carried out on Wednesday. So, and then of course the number of traded stocks there was 6. So that's just about it for the unlisted securities market. But now, when we talk, before this, I was talking about the fixed income market. So now, to give us an update into what happened yesterday, to give us more information about that market, let's speak with Ramat Baba, who is a fixed income dealer at FBN Quest Merchant Bank. Thank you for joining us, Ramat.
Good morning.
Okay, so can you bring us up to speed with the activities at the fixed income market, in particular the open market operations?
Okay, so prior to now, that's around last week, we saw very little activities in the fixed income market, as in both in the bond and treasury bills space. Coming into this week, we've had a bit more activity, and that's following on the liquidity in the system, the 20 people picking up some bills, because there's a lot of liquidity in the system, and also secondly because following the news of the federal government's announcement of the issuance of Eurobond, about $6.15 billion worth of Eurobond should be raised sometime in September, and that's over 2.5 trillion naira. So we've seen a lot of demand. Of course, that clearly shows that the DMO shouldn't be under a lot of pressure to sell bonds during the auction. So we've seen a lot of demand coming into the bond space. we saw a lot of buys, and as a result, yields trended slightly lower yesterday compared to other days where we've been seeing yields going higher.
Okay, so now in a couple of less than 2 weeks from now, we should be expecting the latest inflation numbers to be rolled out from the National Bureau of Statistics. So now, and we've had the inflation figure going down for about a third consecutive month. So now, if inflation numbers are to rise, what impact would that have on the fixed income market in the coming days?
So then, most traders in the market no longer trade inflation. So we've not been seeing a lot of impact on bonds as a result of inflation, really. For the treasury bill side, what really affects our market has been liquidity, and for the bond side, it's been more of supply, how much bonds is the DMO willing to sell and all. And of course, the DMO are keeping a consistent stance. They've not been overselling in previous auctions. So the expectation is they will continue with that, especially with the issuance of the Eurobond. So we really don't expect to see any impact of inflation on market activity.
Okay, so thank you, Ramat, for that information at the fixed income market. That was Ramat Baba, fixed income trader at FBN Quest Merchant Bank. So, Ladi, it's the last trading day for the first week of August.
Fingers crossed for the weekly close. And I'll be awaiting the return of institutional investors, as your first guest actually said.
Optimism is the watchword, but you never can tell.
All right. Thank you so much, Anyete. All right, after the break, we'll do a quick call to London. That's in a moment. Do stay with us. This is Business Morning.
And a quick look at what's going on in London. We have Juliana. Good morning, Juliana. KPMG has been fined a near record £13 million and severely reprimanded by an independent tribunal for misconduct in a long-running case relating to the sale of the bed maker Silent Night to a private equity group in 2011. What more do we know about this story?
Yeah, it's a very detailed case. We don't have much time, so but it is a very, very serious case. This isn't the first time KPMG have been warned about misconduct from one of their staff. This one is about a partner called David Costley Wood, who was overseeing this case about 10 years ago. And what the Financial Reporting Council and the private pension fund have found is that at this time, 10 years ago, KPMG basically pushed Silent Night into administration on behalf of HIG Capital, a US-based private equity firm, so they could buy the British bed maker out of administration, but they weren't supposed to go into administration. The court have found that if KPMG were handling the accounts directly, they could have been saved. So again, there's lots of detail in this case. It's a record-breaking fine, just short of what was handed out a couple of months ago to another accounting firm. They've also been told to pay £2.25 million worth of court costs. And the David Costley Wood, who's now retired from KPMG, he's also been ordered to pay £500,000, but pretty serious. So there's definitely going to be lots of ramifications and fallout later to come.
And Virgin Galactic says it will open ticket sales on Thursday next week for space flights, starting at $450,000 a seat. This is certainly not for you and I, Juliana.
Yeah, not for me, Chimeze, maybe you, but certainly not for me. Pretty interesting, actually. I'll just segue to Channel's Business Global later today, because we actually speak about this story with a former NASA astronaut, a female NASA astronaut, who's actually spent over 100 days in space. So do watch out for that interview. But yes, Virgin Galactic have had a surge in interest after Sir Richard Branson, its founder, managed to fly over 53 miles above Earth. into the edge of space, groundbreaking, historic, and now lots of people want to go if you can afford it. The only thing is the $450,000 ticket price is more than double the $200,000 that was put out last year. Apparently they've sold 600 seats, one of them to Elon Musk, and there are options, Chimeze. So if you can afford to go with your husband and your children, you can also get the full craft for your own use if you can afford it, or shall I say if you're daring enough. I don't think I'll be, but I'll certainly be looking at the updates on social media.
I'm not daring when it comes to this, and I can't afford it, I must say. All right, thank you very much, and I'm sure we'll get more of data from you later in the day, Juliana.
Thank you.
Okay, let's look at the crypto market. Well, Ladi,
Yep.
it seems to be a Green Friday.
Yeah, it's a Green Friday, and maybe if you had bought Ethereum at $7, you'd be able to afford that ticket. Now, selling Ethereum at $2,700, you know, but that's what it is. We still have a Green Friday. Bitcoin is up 5% this morning. Ethereum, a couple of major altcoins, all in the green. And we have the stable coins in the red, showing that traders are quite bullish this morning. Market cap, $1.67 trillion, up about 3.35%. 24-hour volume, $102.45 billion, up about 26% this morning. And Bitcoin dominance at 45.90%. Price of Bitcoin above the 40K range now at $40,790 at ATM this morning. The bulls seem to be pushing for a higher range of the 40K region. 24-hour volume, $37.75 billion traded in Bitcoin. Look at the 1 hour chart there. We see Bitcoin there. We see that big, massive candle. And we have a bullish MACD cross. And it's not yet oversold. And the RSI is still below around the 60-point range. Let's talk to Michael Anaji now, digital market analyst. Hello, Michael.
Hello, Ledi. Good morning. How are you?
Great to have you. Thank God it's Friday, Michael. Well, Ethereum London hard fork is finally live. And apparently, approximately 2.3 Ethereum will be burnt every minute through transactions. What does this mean for the Ethereum ecosystem?
It means a lot of things. So ETH has made what is a very big move, effectively, to become ultrasound money. And what they're trying to do is they're trying to create a deflationary cryptocurrency. And by doing what they've done, by trying to go from a price-first auction model system, which creates a perverse incentive for basically all the wallets and exchanges to bid against market participants and raise the fees on Ethereum, they've now moved to this, like we discussed earlier, the base fee and the tip fee. And what's unique is the incentives of the miners are the incentives of the user is what's important now, because before you could send a transaction and if it didn't settle, your fee went away to the miner. But now you have what's called a max fee, and that max fee, if your base fee and your tip fee ends up being more than what's needed, because Ethereum dynamically now allocates block space based on the fact now that there's no longer the auction model system, it now creates incentives for users, because now you get a refund if your base and your tip fee is greater than what needs to be sent. Okay. So before, miners used to just eat that, and it just used to go away. So ultimately, you have ETH getting burnt, and I think it's about 2.2 million ETH they're projecting to be burnt across the next year. And you have NFTs blowing up, and you see the drawdown in exchanges. And so fundamentally, you see a picture where ETH just got a UX improvement of a factor of a magnitude greater than we can, see on the surface. I think what's happening is akin to the Bitcoin halving effect. And if they are successful, and you have all these use cases for ETH, you do see a crazy, what's called flywheel. So you have the demand of ETH increasing at the same time you have the supply drawing down, and you could see a massive shock that most people won't expect. And you could see ETH start gapping. I think Raoul Paul, a famous trader, he said ETH is the greatest trade of, I think, the year.
Wow.
So it looks just like the chart in 2017. And then you now have this dynamic of the supply decreasing. And now you start seeing how the market cap, yes, can go up because it's now deflationary. Like, yeah, there's like a couple 100 million units, I believe, of ETH. So, it's harder to move that market cap. But when you now start shrinking that market cap, you can now start seeing how they can now, become $1 trillion asset because, the units are decreasing and the demand, NFTs, and all these other use cases are blowing up.
So is this the catalyst for the flipping, where you see Ethereum actually flipping Bitcoin on CoinMarketCap? Is this what will bring that about?
I don't want to make any kind of ascription, any kind of ascriptions as to what if it's going to flip in, but you definitely see the use cases of ETH building up, and on every single major city in the world, the biggest buildings are banks, and if ETH is right, they're going to come for those banks, and so you could see a situation where rather than having giant skyscrapers, all of this is just smart contracts. And what's backing the smart contracts? ETH. So it's not a far off assumption. Okay. It's something to keep in mind and bet against. I mean, bet for or bet against, however you see it. But it's something to definitely consider if ETH does end up, for some reason, flipping Bitcoin. Not that that will happen, but let's just pretend ETH does help eat all the financial stuff that is in the world today. You can see a price target of higher of $100,000 in the next 10 years.
Wow, that's a big one. Well, we had an analyst say about 30K in 5 years, but we'll see how it all plays out. Thank you so much, Michael. Always great to talk to you. Enjoy your weekend.
You too, Laddie. Thank you so much. Always a pleasure.
All right, Chibi, there you have it. Top points for market cap, BNB up 1.56%. Doge is 20 cents, up at 1.30%. And XRP is the biggest mover there, up about 1.95%. So it's looking really good.
Yeah, I'm going into the weekend just wondering which of the coins we should be keeping our eyes on.
Well, for me, it's still this Ethereum, because it's all about Ethereum right now.
But if I can't afford Ethereum as it is now, what about other altcoins?
Well, you have ZRX, you have XRP. There are a couple of them, so yeah.
Okay, we'll see how that plays out.
Yeah.
All right, that's it on the program for today and, of course, for the week. Thank you for being part of it. I'm Chimeze Obi Iwawu.
And I'm Laddie Williams. Remember to join Business Incorporated at 1:30 for more business updates. Thank you so much. Enjoy your weekend.